So, good evening, everyone. So, my name is Suren, and I'm the faculty member of Adyan Institute of Finance. I've been associated with this firm since a long time, and I have an experience of 5+ years in trading and 3 years of experience in training students. So, I've been mentor since 3 years, and I have trained almost 1,000+ students in my career. And it's so good to meet you all in this session. So, before I get into the session, I just wanted to ask how many people are following our intraday levels or critical levels of Bank Nifty? Please raise your hands. How many people are following intraday levels and critical levels that we are posting in the public group? All right. Okay, just give me a small answer for either yes or no for are those levels helping you out or not? Yes or no? You can give a genuine answer, honest answer. If it is a no, then it's not a problem. We'll try to figure it out what's going on. But if it is really helping you out, please say yes. If those intraday levels and critical levels that we are posting every day, so you might be thinking, who's that person or who's that fellow is posting every update of Bank Nifty and Nifty? It's me personally. I message from my phone. I use the phone to send the screenshots of the Bank Nifty and Nifty, because it's quite easy to take screenshots and send it immediately. It would be difficult for me to send from the computer. So that's the reason I'm using the the mobile, and I'm sending almost for every 10 to 15 minutes. I'll be sending the updates about the reversals and the breakouts. I hope everyone are following those levels, and uh, mm, I hope these levels are getting some impact in your trading style. You might be understanding now why Bank Nifty is reversing at that point, or why Bank Nifty is moving up from this point. So if you can see any sharp reversals happening in Bank Nifty, we know that, because we have those levels, we have that strong levels at that point. So definitely the market is going to come down at that point. So all these things. Yes, Prashant. So that's what we will be discussing in our technical course. So that's what we are here for. So we actually wanted to create awareness about price action, especially why prices move, why prices break out, or why prices reverse. All these things are exclusively and detailedly discussed in our 1.5 month technical course, that is for 16 modules, and we will be divided this technical course into 16 parts, and we have detailedly explaining every aspect of price action, starting from the basics and advanced, and finally the professional way. And finally, the last module we have added recently is options. So a detailed explanation of basics of options, why options, how options will work, and why we need to do in options, and what are the advantages of options, and what are the merits and demerits using options. Everything is covered in the 16 module. And we are happy to announce that our batch number 4, this is exclusively in English, but we can use Hindi as well. So it might not be in completely Hindi. A few people are asking me for Hindi, but I will be teaching mostly in English. But anybody is not understanding, definitely I'll be repeating it in Hindi. But most of my even Hindi students are able to understand my basic English, because I will not use any complicated language here. I'll be using the basic English language where almost every person can understand my pronunciations or language. So we don't have any complaints as of now, uh, uh, for especially Hindi students who are joining our course. So if you still have any doubts, you can text us. I don't know your name. During the course, at the end of the course, you will be having 15 to 20 minutes. At the last, you will be having discussions also. Okay. And we are happy to announce that the batch 4 will be starting at 18th of February. And we are happy to welcome you all to join this course and get the best input from us and best knowledge that we are going to share with you all, the intraday levels, the critical levels, and the way you have to enter a strict stop loss. Yes, the support after the course will be for next 6 months. So it's overall 7 month mentorship program. Okay. The technical course is for 1.5 months. After that, you will be having next 6 months, you will be guided by us, by our professionals for next 6 months. And you will be provided with recordings as well. Whenever you have any doubts, you can see the recordings as well. So if you miss the class, the next day you'll be having the recording sessions as well. Okay. And the course fee is 5,000 rupees, and early bird option is 10% discount. We are giving 10% off on early bird students. Those who are joining in this week before 18th, you will be getting 10% off. You can text us to the WhatsApp number. The WhatsApp number will be provided at the end of the session. After that, you can ask your queries to the management team. Now, first question, how many people are actually trading with options? Let's start the session. At the end, we will be discussing few more things. Any queries we will be discussing. How many people actually work with options? I can see so many hands raising up. All right. Now the question is, how many people are losing money in options every day? How many people are losing money in options? Yes. The thing is, options is very, very addictive because of less margin that it need for trading, but it is very, very rewarding. Okay, you can get 200%, 300 returns sometimes if you know options very well. In an intraday basis, options is very, very rewarding. But how many people know options is not actually a trading tool? How many people know that options is not a trading tool? It's a hedging tool. The exchange, NSE exchange, has created options and futures only for hedging purposes for the investors. But we people has converted them into trading, and we are using that advantage to make more returns in options. The reason here most of the people lose money in the options is there is a certain element or a term called decay. Premium decay is something which will eat your money by end of the day if you don't know what you're doing. Let's say you bought Bank Nifty at 30,000 today. By end of the day, if the market came back to 30,000, you bought an option, you will be at loss. In futures, you might be at break even, but in options, you'll be at huge loss because of the decay. To avoid such kind of a situation, to be on the safe side using options, we have come up with few hedging techniques. Okay. Few hedging techniques that we are going to discuss today, that is long straddle and short straddle. Okay. And I'll be telling you when to enter, where to enter, and how you need to take the entries, everything, what is the logic of entry and what straddle you have to be taking, when you have to do long straddle and when you have to do short straddle, everything will be discussed here. Okay. So let me share my screen. Okay. So the module today is generally the options. Most of the option traders will be holding it for weeks until the expiry date. Can anyone tell me what is the expiry day? Every week, what will be the expiry day? What will be the expiry day? Every week, Thursday is the expiry day. But we are not going to we are not going to deal with any expiry here. Understand that we are not going to deal with any expiry. This is a pure price action based trading. So let's not deal with any kind of expiry. Even on the expiry also you can trade this. That's how this is planned. Okay. Now, first let us understand these 3 points. Everybody can see my screen? Yes or no? Options. Are you able to see the PPT that I'm going to show you now? Everybody? All right. Now, these are the 3 elements that you need to be understanding before entering into options. That is OTM, ATM, and ITM. What do you mean by OTM? OTM is none other than out of the money option. Out of the money. And ATM means at the money. ITM means in the money. So these are the 3 things that everybody should know before they get into trading with options. Now, let's see how we need to understand what is ATM, what is OTM, and how ATMs or OTMs will affect our trading. Okay. Now, let's say the Bank Nifty is at 30,000. Right now, Bank Nifty is at 30,000. Let's say. Okay. Now, I'm not going to give you all the basic things like what is call option, what is put option. I hope everybody knows when to take call option, when to take put option, right? The call option has to be bought when the market is moving up. The put option has to be taken when the market is coming down. I'm talking about buying the options, okay? So all these basic things we wouldn't be teaching here because I'm expecting experienced crowd here. Not exactly an experience, like at least few basics about options, like when to take call option, when to take put option. If you still don't know what is call option or put option, you can message us after the session. We might be helping you out, but we have decided to go with the strategies only today. We are not going to deal with any basic things about options, like what is call option, what is put option, what is the difference between call and put. All these things will be basics, but anyways, now understand one thing. Let's say if the market is at 30,000, okay? Now, what do you mean by ATM CE, that is call option, or ATM PE put option is the exact strike price will be called as ATM. The exact strike price of put option will be called as ATM. Both 30,000 will be called as both 30,000 call and 30,000 put will be called as ATMs. That is, right now market is at the money. So both call and put will be called as at the money options. Understand that. If you can see the higher values, if we take the higher values, that is 30,100, 30,200, 30,300, 30,400, all the call options of these strike prices will be OTM. That means out of the money. That means the price is yet to reach that price, yet to reach that level. It didn't reach, but the price might reach that level in the future. So that is the reason all the above prices will be called as OTMs in call option. Okay. Now, all the lower values, okay, all the lower values, that is 29,900, 29,800, 700, 600 are called in the money. During the call option, all these lower values will be called as in the money call options because they have already reached and market has reached 30,000. That means to reach 30,000, the market has to cross 26,000, 29,600, 700, 800, 900. So they have already crossed that level and the market is at 30,000. That is the reason all the lower call options below your 30,000 level will be called as ITMs or in the money options, in the money call options. Okay, let's talk about PEs now, put options. The market is at 30,000 and if the market has to come down, the market has to reach 29,900 first, later 29,800, later 29,700 and 29,600. All these are yet to reach. That means they didn't reach, they are yet to reach. So that is the reason all the lower values in put option strike prices will be called as OTM put options, out of the money put option. That means the market is yet to reach those levels if the market is coming down. So that is the reason all the put options lower than your current market price will be called as out of the money put options. All the above values 30,100, 30,200, 300 and 400 are the values they have already reached and came to that level, that put options. So they have already reached and crossed and reached ATM. So all these upper put option, upper strike price put options will be called as ITMs or in the money put options. Everybody understood till here? Say yes if you understood this basic concept. Everybody? All right. So let me go to the next point. Now, I understood, sir, we already know these things. Now what? What should I do with these opinion? Like, how do I deal with this ATMs or OTMs or ITMs? Now, let's see how the momentum will affect in options and how the decay will affect in the options. Momentum in options. Let's talk about the momentum in options. Momentum is nothing but the rate at which the price is moving. Okay, the rate at which the price is moving. Faster way or slower way, how do we deal with? Momentum and decay are completely opposite. If the decay is higher, that particular option will have less momentum. If the decay is very less, the momentum will be very higher in that particular option. So if you want to buy any option, choose one particular option which has very less decay and very high momentum. If you want to sell an option, choose one good option where the decay is very higher and momentum is very less. Such kind of options are needed for buying or selling. Now let's see how the momentum will be in the options with ATMs, OTMs and ITMs. I'm talking about momentum, guys. Okay. Let's say this is the scenario and the market is trying to be bullish. That means the market is moving up. What will be the momentum levels that we can see in ATMs and OTMs of call options is all the ITM Cs, that is in the money call options, will have very high momentum. That means they run very fast. They move very fast. The price moves very fast if the market is moving up. Okay. And the ATM will be considerably high, but when it compared to ITMs, the ATM, that is at the money options, might not be that much effective, but all the ITMs will be very faster and the ATM will be little slower when compared to other ITMs. Now, all these 100, 200, 300 are OTM call options. The OTM call options will be having very less momentum. That means until they reach this level, the momentum will not be increased. Until the market reaches 30,100 or 30,200 or 30,300, these levels or these prices will not move. That means in this particular momentum less options, what will be higher? If the momentum is less in the options, what will be higher? What will be higher? Premium decay will be higher. Yes or no? So all these options are, all the OTM options are good for selling. All the ITMs and ATMs are good for buying. This is the logic of momentum. Let's talk about PEs now. That is bearish. If the market is falling down, what are we going to do? If the market is falling down, all the ITM PEs will have very huge momentum. The ATM will have comparatively good momentum, but still good momentum, but comparatively with ITMs, ATM might not have very good momentum. When you can see all the OTM PEs, that is OTM put options, will have very less momentum. So this will have highest decay and these will have less decay. That is the reason if you want to buy any put option, choose either ATM options or ITM options. Never go to OTM options if you want to buy. What you have to do with selling is go with all the OTM options for selling, go to the all ITM options and ATM options for buying. So this is the momentum in the options with call option and put option in the trend of bullish and bearish. Okay. Next, let's talk about decay. Let's talk about decay, guys. Premium decay. That means the price will be shrinking and it will become zero by end of the expiry. That will happen. Now you can see all the OTMs, have highest decay. All the ITMs and ATMC has very less decay. You can see here all the ITMs and ATM Ps have very less decay and OTM Ps have very high decay. So that is the reason if you want to sell these stocks, you have to choose these stocks for PE and these stocks for CE for selling the options. Always choose OTMs for selling, always choose ATM or ITM for buying. So this is how momentum and decay will be fighting with each other while buying and selling. While the index will not have, that means our Bank Nifty futures or index will not have any decay or momentum, it will move in its own pace. But options will be working in a way more different way than the index or futures. So all the OTMs will become zero by end of the Thursday. All the items will remain at the same point. That means either up or down, depends on the movement. But what is the logic of options is all the OTM Cs and Ps should become zero. That is the logic. So if you want to sell any options, take one good OTM and sell it. Now let's get into the strategy. Then you might be understanding what I'm talking about. Now the strategy, please everybody look at the strategy very carefully. The strategy is special long straddle. This is not a normal long straddle. This is a special kind of long straddle that I have created. Okay, that is the reason I have given a special long straddle. You might be Googling about long straddle, you might get some other information. That is the reason I'm focusing on. Don't compare this with any other long straddle. This will be little different, but the logic will be same, but the application will be little different. That is the reason I named it as special long straddle. Don't get confused with normal long straddle and say that both are different, what should I do? No, let's focus on what I'm saying and then see what's happened. Now understand one thing. What is long straddle? What do you mean by long straddle is it's the combination of buying call option and put option of same strike price. Let's say I want to choose one strike price of 31,000. I will buy call option and I will buy put option at the same time. That is called long straddle. But if you do it randomly at some point of chart, you will end up in losses if you don't know the direction of the market. This has to be applied only when you know the direction of the market. Please understand this. So first understand what is long straddle, then we will discuss about when we have to apply this. The logic is it is a combination of buying both CE and PE of same strike price. That is, if I choose 30,000, I will be buying 30,000 CE and I will be buying 30,000 PE. But if you can observe here, I'm not doing ATM CE or ATM PE here. Generally, the long straddle will be ATM CE and ATM PE, but I'm not doing that. I am using ITM CE and OTM PE where the strike price is same. That means, understand one thing, the strike price will be same. That is, let's say 30,000. 30,000 CE. 30,000 is my strike price, but the 30,000 CE is at ITM CE, that is in the money call option, but 30,000 will be PE will be OTM, that is out of the money. Now, if I keep a race between ITM CE and OTM PE, who will win? ITM or OTM? Who will win? If I keep a race between ITM and OTM, which will win if the direction is correct? If the direction is correct, I mean, if I say if the direction is bullish, which will win? If the direction is bullish, which will win? ITM or OTM? ITM CE or OTM PE? ITM CE. So we are going to use ITM CE and OTM PE where the market should be bullish most of the times as per our logic. What happens is, if you only take ITM CE, if the market falls, you will make huge losses. That's what generally happens. But if you use OTM PE, if the market is falling down, what will happen to that OTM PE is it will become ITM PE. So who will run faster now? PE. So it's kind of an average situation that we will be creating if the market comes down, and we will create a winning situation in the ITM CE. So this is what we call it as a special long straddle that I have created. All right. Let me go to the strategy first. Then let's see I will show you in the live market how this works. Okay, don't worry. Now, what is the strikes price selection? How do I select my strike prices? Take the first 5 minutes candle of Bank Nifty. Let me talk about Bank Nifty, then you can talk about Nifty as well. Take the first 5 minutes candle of Bank Nifty, take high and low. Take high and low of first 5 minutes candle and do the averaging. That means let's say high is 30,300 and low is 30,100. What will be the average? 30,300 is the high and 30,100 is the low. What is the average value? 30,200. Everybody? So that will be my strike price. That's how I will be deciding my strike price. Now, what will be the time frame I'm going to use is 5 minutes. 5 minutes is the time frame that I'm going to use. And what is the logic of entries? I'm going to use simple moving average 10, period 10, simple moving average 10. Okay. The logic is, if it gives a breakout away from my opening price, let's say my opening price of Bank Nifty is 30,100. Okay. 30,100. If the market is at 30,100, if the market is moving up, that is 30,200 or 30,300, I am going to apply this long straddle after the breakout at 10 simple moving average 10 MA, SMA 10. The target you can book with one lot is maximum 1,000 to 1.5. It can go to 2,000 also, but let me be a little safe. So try to book your profits at 1,500 if possible. What about the stop loss? This is not about the logic of stop loss. This is all about the stop loss limit that you have to keep. Keep a stop loss of 800 rupees max. If you lose 800 with one lot, you have to exit the trade. That's important. That means the market is not moving as per our logic. So come out of the trade if you see somewhere around 800, 700 rupees. Okay. But this is how you have to plan. Let me show you in the pictorial representation. Then you might be understanding what I'm saying. Let's say this is the market. Okay. Let's say this is the market and this is my first 5 minutes candle. And let me take, this is the average. Let's say this is 30,000. My average value is 30,100. Let's say. Now, this is my 10 simple moving average with 10 period. What I'm going to do is, if the market moves away from my opening price. So this is my opening price. Okay. This is my opening price. If the market is moving away from my opening price, this is the breakout candle and this is my confirmation, and I'm going to take an entry at the high of this candle. So this is the point where I'm going to enter. And where should I book my profits? There are two ways to book your profits. That is, if the market comes below 10 MA, you have to exit your trade, or you can book your profits with MTM. If you reach your target of 1000 rupees or 1500, then also you can close your trade. What will happen is the ITM CE will make more profits, the OTM PE will make less loss, so overall you will be making profits. The ITM CE will run faster, the OTM PE will have less momentum, that is why it will lose less. That is the reason you will be making more profits. Okay, here this is 30,100. If I buy here, my 30,100 CE will become ITM CE, and 30,100 will become OTM PE, because the PE is above, both CE and PE are above my current market price or the market price that I have decided. So what it will show? It will show that 30,000 is CE, that is ITM CE, and 31,100 is OTM PE. That is how this will actually make money in the long straddle. What if the market falls? Okay, understand one thing. This is not about the breakout, guys. In the morning itself, if the market is falling down, okay, falling down, then also you can use long straddle. Okay, then also you can use long straddle. It's not about breakout. Understand one thing. If the market is moving away from your strike price on either side, let's say if the market is moving away from your strike price, this is your strike price. If the market is moving away from your strike price, you can use long straddle. If the market is moving away from strike price, you can use long straddle. Both the cases you can use long straddle, that is buying both CE and PE of the same strike price that we have decided as the strike price. Strike price can't be changed, guys. The strike price should be the same one that we have decided in the strategy. Don't use random strategies and you will be confused and you might be losing the money also. So this is how a long straddle will be created. Shall we see this in the original live? Shall we see this? Shall we see this in the original live market, and let's calculate how long straddle has helped? Everybody is ready? Yes or no? Let me show you the live. What are the results? And then we will go to the short straddle. Okay. Now, this is the scenario that we had in the last Friday. Okay. As you can see, the market has given a breakout on the upper side. This is the breakout candle and this is the confirmation candle, and this is the place where I'm going to take an entry. Now, please understand what is at what time that I have to enter my long straddle. Anyone can tell me what is the time where I have to enter? 10:30? Can you tell me what is the time here? 10:30? This is the candle where I will be entering at the high. Can you tell me what is the time of the candle? So 10:30 is the candle and I will be entering at 10:35. That is, at the 10:30 high, I will be entering into the market. All right. So I will be, so understand one thing. Let me plot the high and low of the first 5 minutes candle. Can you tell me the average of high and low? Can you tell me the average of high and low? What is the average of high and low? Anybody? This is the high and this is the low. What is the average value between high and low? How many people can answer me? 35,850, which is near to 35,800. So I have to buy 35,800 C and 35,800 P at 10:35. I have to buy 35,800 C and 35,800 P exactly at 10:35. That is high of the 1030. Let's see what's going to happen now. 35,800 C. So this is 35,800 C, guys, and I will be entering at 1030. So what is the high where I have entered? What is the high where I have entered? Can you see what is the high that I have entered? 751. Now where should I exit? At this candle, because this candle closed below my 10. That is 915. Okay. This is my profit that I got in my C, because I know the direction of the market. That will be buy, because the market has crossed 10 SMA. So 750 minus 915. How many points did I get profit using one lot? How much profit? 215 points I got. And what will be the overall profit? That will be in 10 MA, 10 SMA. Okay, you can use 10 SMA. Okay, guys, tell me what is the profit that I have got. 750 minus 913. How much, guys? It's not, Prashant, this is not Nifty. This is Bank Nifty. 750 minus 913. 163 into 25, that is 4,000 rupees profit, guys. I have got 4,000 rupees profit in this particular ITMC. Let's see how much did I lose in 30,000, 35,800 P. 35,800 P. I have to buy at 1030, that is 614. Okay, I have entered at 614 and I have closed at what point? What is the place where I have to close? That is 35,800 C. Just a minute, guys. That is 1135. I'm sorry, 1135. So 35,800 PE. I have to close my losses at 1135. That is 558. I have entered at 614. 615 minus 558. How many points, guys? 615 minus 558. 56 points. That is, I have lost 56 points. I have gained 163 points. What will be the overall profit? That is 163 minus 56. 163 minus 56. How many points overall profit that I got? Almost 100 points. So the profit will be with one lot 2,500 rupees. This is how long straddle will be worked, guys. Okay, this is how the long straddle will be worked. Buying both same strike price at some random point is not what we want. We need to have a right strike price and a right entry, that then only we will make some money out of it. Everybody understood? Yes or no? Everybody understood? Please say yes if you understood. Please say no if you didn't understand. Please say no if you didn't understand. We will be discussing again if you want by end of the day, if possible. All right, that's good. Hope everyone understood this logic. Now let me go back to the session. Aslam, you are our mentorship member. You will be getting this recording again. Don't worry. Okay. All right, guys. Now let's talk about short straddle. What do you mean by short straddle? No, Aslam, what I'm saying is, if you didn't understand also, we will be giving the recording, because you are already a member of our technical course. So you can get the recording again. Those who are public group, they might not be getting the recording, but those who are already the members of the technical course who are joining this class, they will be getting the recordings. Don't worry. The public group might not be getting the recording again. I don't know, but don't worry. The technical the mentorship people, don't worry about it. Okay. Now let's talk about the special short straddle. What do you mean by short straddle? Now understand one thing, buying options is very easy or cheap. All you have to pay is the premium. Hardly you might be needing 20 to 30,000 for longing the straddle, that is long straddle. But for short straddle combination, you need at least 80,000 to 1 lakh, guys. If you want to go with short straddle, you need at least 1 lakh, 80 to 1 lakh, 80,000 to 1 lakh. Okay. But because selling the options is costly, it takes the equal amount of margin that is required for the options. So if you have enough money with you, that is at least 1 lakh, you can go with one lot of a short straddle. Okay. Yes, Abhishek, it's like if you are going, let's say, if you want to enter into bank nifty buy, instead of taking bank nifty buy, go with long straddle. Okay. Let's say you are going with, understand one thing, selling the bank nifty and having the short straddle, not same. Okay. Don't confuse between that. Understand one thing, when we have to use short straddle, when we have to do long straddle. Let's say this is my strike price. Okay, let's say this is my strike price. If the market is moving up or if the market is moving down with respect to the strike price that we have chosen, then only you have to use long straddle or long straddle. But if the market is coming towards the strike price, or if the market is coming towards the strike price, you have to use short straddle. Towards the strike price. Understand one thing, the market moves up or market comes down, you can use long straddle, not a problem. But if the market is reversing and coming back to its original point, from either upward to downwards or downward to upwards, the U-turn, whatever the U-turn happening, you have to use short straddle on the both the sides. That's important, guys. Okay, don't confuse between selling and buying bank nifty. Understand the logic. If the market is moving away from your strike price, you have to use long straddle, either upper side. See, moving away can be any side, upper side or lower side. Okay, you can be using upper side or lower side, not a problem. But if the market is coming towards your strike price, that means it is coming back to its friend. It is coming back to its friend. Then you have to use short straddle. If it is going away from the friend, you have to use long straddle. If you are going towards its friend, you have to use short straddle. Let me talk about it now. Okay. Now let's see what is short straddle. It is the combination of selling ITMC and OTMPE of the same strike price. Now tell me which of these will have highest decay. ITMC will have highest decay or OTMPE will have highest decay? Which will have highest decay? OTMPE. So in which side you will win? OTMPE or ITMC? OTMPE or ITMC? Which side you will win profit and which side you will lose money? In selling, which side you will make money, which side you will lose money? In ITM side, you will lose money. In OTM side, you will gain money. This is the logic of short straddle. It's just opposite to whatever we did in long straddle. Okay. Now understand what is the logic is. The strike price, as we told, that is the average value of first 5 minutes candle high and low. Okay. Now, what is the logic is, if the market is coming back to it's coming near to its strike price, then you have to use long straddle. For that you need moving average 10 SMA. Okay, here also the target will be 1K to 1.5K. the stop loss can be 500 to 800 using one lot. Now let me show you how a short straddle should be applied. This is where the short straddle should be applied. You can see why I have used short straddle instead of long straddle is the market went up. This is my strike price. This is the average of high and low that I have taken. Okay, this is the average of high and low that I have taken. And if the market is coming towards the strike price, then you have to sell OTM PE and ITM CE of the same strike price. That is, let's say this is 30,000. So 30,000 CE and 30,000 PE is what you sell, and you make money in 30,000 PE and you will lose money in 30,000 CE, but you will make more profit in 30,000 PE and you will make less loss in the 30,000 CE, and that's how you will make overall profit. Same. Understand one thing, Vithal Savant, the point is, let's say the market has crossed and again it's coming down. Until here, you can go with short straddle. After reaching the strike price and moving away from strike price, again you have to use long straddle. Only if the market is moving towards the strike price, then only you have to use short straddle. I hope you understood this simple logic between moving away from strike price and moving towards strike price. If you didn't understand, this strategy will not be useful to you. Moving away can be upper side or lower side. Coming towards strike price can be from upper side or lower side. From coming towards from upper side to towards strike price on from the lower side, you have to use short straddle. If the market is moving away from the strike price and if the market is moving away from on the downside also, you have to use long straddle. Understood, Vithal? Vithal, Mr. Vithal Savant, did you understand what I said? Perfect. Now, these are the two long straddle and short straddle that needs minimum investment of 1 lakh. Okay, if you have 1 lakh investment, you can go with this kind of a logic. Okay, I'm going to show you two more strategies. That is covered call and covered put. This is also some good technique that we can use. Special covered call. This is not a normal covered call, guys. Please understand, this is a special covered call. If you Google covered call, the logic behind my system and that system will be completely different. So don't compare that with this. Focus on whatever I'm saying. If you didn't like it, then it's not a problem, but don't take me wrong whether this is correct or not. This is my way of doing covered call, okay, where risk management is my utmost priority. Okay, not making money is not my utmost priority. Saving my capital is my motto. There will be two different traders, taking high risk and making high reward, and second trader taking less risk and making minimum profits. I'm second trader. I always focus on saving my capital and making grow my wealth. If you are a second guy, this is a best strategy that you can use. If you are an aggressive guy, don't go with this. Directly take sell buy. Buy futures or sell futures, simple. But if you want to, save your capital, if you want to be little safer, then this is a perfect strategy. Thank you, Aslam. All right, guys, let's talk about special covered call. What do you mean by special covered call? The logic is same, guys. Okay, the logic is same where forget about long straddle and short straddle. This is about if the market is moving up, covered call. If the market is coming down, covered put. Not towards strike price or away from strike price. Don't use that in this covered call. Covered call is related with futures. It's a combination of futures and options. So don't use a logic of going away from strike price or going towards strike price. That will not work. It's all about the trend. That is either upper side use covered call, downward side use covered put. Let's talk about what is special covered call that I have researched about. That is It's a combination of buying one lot of futures and selling two lots of OTM-CE. Buying one lot of futures and selling two lots of OTM-CE. How do I define my strike price is? The strike price is nothing but the futures plus 300 premium. That is, let's say my current market price of Bank Nifty is 30,000. What is the strike price that I have to choose? The strike price that I have to choose is 30,300. Simple. So what are you going to do? I'm going to enter a buy at 30,000 and I'm going to sell two lots of 30,300. What will happen is, if the market moves, so where is the target that I need to book is, if the market reaches your strike price, you have to exit. Simple target. If the market reaches your strike price, you have to exit. Yes, future is the month expiry and options is weekly expiry. Or you can go with monthly options also, not a problem, because we are not dealing with any kind of expiry strategy here. You can use this in any scenario, but don't use this strategy in expiry because the premium will be very less. All you can use is for Wednesday and Thursday, use next week options, that would be better. The reason is, it's not like it won't work in the expiry, it will work, but the premiums will be very less. So don't work with less premiums, go with high premiums. Now, for this special covered call, you need at least 1 lakh to 1.5 lakh. Okay, for taking this combination. For each lot, you will be needed 40,000. So 40 plus 40 plus 40, because you are buying the futures and you are selling two options. That is, one option will be 40,000, futures will be 40,000. So two lots of 40,000 will be 80,000 and futures will be 40,000. Overall, you need 1,20,000 to 1,50,000 on an average if you want to go with special covered call. Okay, you need. But this is an intraday level, okay, only for intraday. Don't use this for carry forwarding it. Don't do that. Okay. The investment required for long straddle is, please note down if you want again, the investment needed for long straddle is the premium that need to be paid. So hardly you will be having on an average 20 to 30,000 is required. The investment required for selling or the shorting the straddle or short straddle is minimum 80,000 to 1 lakh. The investment required for covered call or covered put is minimum 1 lakh, 1,20,000 to 1,50,000. Minimum 1.5, guys. Take it with noted. At least you need 1.5 lakh. You can't have exactly 1,20,000. What if you lose in the first trade? So keep at least 1,50,000 if you want to go with this trade. But the accuracy of the strategy is very great, very good. The reason is, even if the market moves up or market comes down, you'll make at least 1,000 rupees. I can guarantee it. If you enter at exact some good position, if you enter at some good position, you will make money. Okay. But understand, if the market is moving as per our direction, you have to exit your trade at the strike price. That means, if what is our strike price? 30,300. If the market reaches 30,000 to 30,300, you have to exit your both the trades 30,300. If you go above 30,300, you will be at loss, because the 30,300 will become ITMC and you will lose money. So go with 30,000 to 30,300 exits. That's it. Okay, simple. Now the logic is same. As I told you, the logic is same, guys. That is, wait for the breakout for using 10 SMA. Enter at this point. I will show you this also. Don't worry. I'll show you this. Enter at here, and this is not the criteria, guys. This is not the criteria. The criteria is you have to reach the target of 30,300. That is your strike price. Exit. Simple. Okay. So don't go with the exiting criteria of 10 SMA, but you can use this for entering logic. Okay. Now let's talk about covered put or married put. You can call it any way. This will be covered put or married put. What is the covered put or married put is? If you know that market is going to fall down, then you have to use covered put. If you know the market is moving up, you have to use covered call. If you know the market is moving down, you have to use covered put. What happens in covered put? This is a combination of selling one lot of futures, okay, and selling two lots of OTMP. Sorry guys, I'm really sorry. The strike price that I have chosen is wrong. The strike price should be futures minus 300. I'm really sorry. I'm really sorry. The strike price. Okay. The strike price is 30,000. Futures minus 300, guys. Let's say if the market is at 30,000, what will be my strike price that I'm going to sell the SPE? What is the strike price that I'm going to take? 29,700. So if you know that market is going to come down, sell one lot of futures and sell two lots of OTM PE. Okay, that is 29,700 PE with two lots. You will make minimum 1,000 to 1,500 on the upper side or lower side, because that's how it is planned. But the exit criteria, as you know, if it reaches 29,700, you have to exit. If the market falls and touches 29,700, you have to exit. If you have a loss of 1,000 rupees, exit. If you got some profits of 2,000 to 3,000, you can exit. But this needs higher capital. So if you are a guy with higher capital, go with this. Try with this with higher lots also. Like how the combination should be is 1:2. That means if you are taking two lots of futures, then take 4 lots of PE. If you have 3 lots of futures, then take 6 lots of PE. That depends on your investment, but I have given you the minimum investment required for one futures, and for the combination of the call, you need 1.5 lakhs. So if you have 5 lakhs, 6 lakhs, 10 lakhs, then you can go with different lots. But these are the 4 different hedging techniques that I have offered you absolutely for free. Okay, go and check with any you can Google. I'm not challenging. That's our promise that I'm giving you. This concept will not be available at anywhere. It's not like, I'm confident, but that's the promise I'm giving you, because this has never been copied from anyone. This has been my research work since a long time. So I'm trying to be humble. I'm not trying to be proud, or I'm trying to be overconfident about it. But I know, but where this combination you will never find at any point. Okay, so these are the special strategies that I've created, and I thought to give you absolutely for free, because I know that there are hundreds of students who are losing money every day in options, especially in options, thinking that options will give you more reward, but the end of the story is completely opposite. They will be losing a lot of money. They don't know where to exit the stop losses. I will show you how the covered call will work, and then I will end up the session. After that, we will have some discussion. All right. So let me open Bank Nifty. Okay, the same logic, same entry. Okay, same entry. So I have entered at 35,949, and so what is my strike price, guys? What is my strike price? 35,800. I'm sorry. My strike price should be 300 plus my entry point. So 35,900 plus 300. How much, guys? 35,900 plus 300. How much? 35,900 plus 300. How much? 36,200. So 36,200 is my target. 36,200 is my target. So this is the place where I have to enter, and this is the place where I have to exit. So exit candle is 11 o'clock, entry candle is 10:30. Okay, let's see what will happen if I sell 2 lots of 36,200 C in the same day, that is 36,200. I will enter at 5:52 and I will close at 11 o'clock. This is the place where it has closed. Can you count how many points we got in C? How many points we lost because we sold this stock? Remember, we have sold this option. 552 minus 708, how much? 156 divided into 2, how much? Into 50. 156 into 50. So there was a problem. You might be exiting little earlier. So there was a loss here. But anyways, let me solve this. You can be booking your profits at 35,949 and 36,200. Just a minute. 35,000. You had a 950 loss. Overall, you had a 950 loss. So might be this is because of Friday, because the momentum is too high. So let me go with 200. Okay, 36,000 plus 200. Let me see. 36,000. Okay. Let me solve this issue right here. Let me not give you wrong information. 95 935949 minus. So let me take 37,100. Okay, sorry, 36,100. Let me take 36,100. Let me see what's going on. So the profit I would be booking is at 35,949 plus minus 36,000. Sorry, 35,949 minus 36,000. 1 second. I missed a logic somewhere. Just a minute. 35,000. Sorry, 36,200. Hold on a second, guys. There is a problem here. I'll be solving that. As of now, don't worry. So there is a problem here. So let me come back to you about this. So let's not go with as of now. Let's not go with the covered call and covered put. We will be coming back to you. There is some problem because of the momentum. There is some issue. We will be solving this. As of now, go with long straddle and short straddle. We will be coming back with covered put and covered call with a proper target logic. The logic is correct, but the target where you need to book is something where you need to be thinking about. So I'll be coming with the targets. Okay, don't worry about it. As of now, focus on long straddle and short straddle, not a problem. Okay, covered call and covered put, I will be coming back. Don't worry at all. The logic is correct. Okay, buying the 1 lot futures and selling 2 lots of OTMPE is correct, but the problem is where you need to book the profits is where we need to be discussing about. I'll be coming back with where you need to book the profits. Okay, not a problem. I'll be ready to help you at any point of time. As of now, go with long straddle and short straddle. I hope you people understood. Okay, now if you have any queries, you can talk to me regarding the queries. Any queries you people have, please let me know regarding the technical course or whatever the any queries, please let us know. If not, we will be closing the session. And let me tell you one more thing. We will be starting batch 4 at February 18th. That is next Monday, I guess. No, let me see. From next Thursday, guys. Okay, February 18th. Anybody have any doubts? or you have the WhatsApp number, you can text them and you will be knowing more details about the one second guys, I'll be sharing you. I'll be sharing you the curriculum. Few people have asked me what is the curriculum, what is the course curriculum. I'll show you the curriculum now. So this is the course curriculum, guys. I hope everyone are able to look at it. All right. So we have 16 modules. Okay, overall 16 modules, starting from basics of options, basics of stock market, candlestick patterns, resistance and support trend lines, volume analysis, breakout and reversal trades, chart patterns, and technical indicators. We will be discussing about risk management, trade management, and trade analysis and different types of orders. And here from 12, 13, 14, we will be getting the strategies. We have trendline basic setup, we have trendline advanced setup, and trendline professional setup. And we have 15 module is the psychology of the market, and finally 16th module that we have introduced is basics of options, where we will be discussing about all the basic terms of options and what is the intrinsic value of money, what is time value of the option, what is open interest, and how do we interpret open interest analysis or option chain analysis. And finally we have 7 different hedging strategies. We have discussed few strategies with you, but still we have more strategies that we will be discussing in our session, in our technical course. Yes, please text to the WhatsApp number. They will be sending you whatever you need. All right. So thank you so much, guys, for your time, and we will be meeting again on next Saturday for further discussion of new concepts that we will be discussing. Don't worry, I'll be getting back to you for covered call and covered put with a proper logic of targets. Don't worry at all. This will work, but as we have a lot of momentum on Friday, this had a issue. We will sort it out. Not a problem. All right. Thank you so much, guys, for your time, and we'll be looking forward to meet you all in the next batch. If anyone is interested, please text us with the to the WhatsApp number that we have, and they will clear all the doubts that you have. And the pricing is 5,000 rupees. And those who wants to join this week before 18th, they will be getting 10% off. That's it, guys. Thank you so much, and signing off.